Hello everyone, it is Sterling here, back for another month-end review. If you guys have not checked out the previous month reviews, what I've been doing is starting in May of 2015, I started going back and covering every trade, every valid trade that we have through the course of the month. And for those of you guys that don't know, I do a daily market preview every day where I pre-select the levels that we're going to talk about here. The vast majority of them are pre-selected. We do have criteria for the creation of a new level throughout the course of a day, which is, again, mechanical as well. So it's a predetermined level, and then the entry criteria being mechanical, it allows us to go back and, whether it is a New York or a London session trade, go back and know exactly, okay, is this was this a valid setup? Was it not a valid setup? Is it a losing trade? Is it a winning trade? That's one of the benefits, one of the reasons why, also for learning the strategy, it makes it much easier because of the mechanical criteria. So many times, especially on the retail side, learning to trade is extremely difficult because of the fact that there's so much discretion involved. In trading, there's always going to be some discretion, but the benefit of this strategy, the bank trading strategy that we use, is that it eliminates 95% of the discretion. So anyways, we'll go back and analyze August. We'll go back through every one of the trades that we had. Just to recap, if you haven't gone through May, May was a 20% month, all based on 2% risk. June, we had a 12% month. August, 31%, or excuse me, July, 31%, and then August, which we'll finish up with here, August ends up being a 9% month. Really wasn't a spectacular month. July was quite a solid month, but decent month nonetheless. And we'll start going back to the trades here. So the first trade that we had was actually on the 6th of August. First trading day was not until the 3rd, so our first trade was on the 6th. And it was a euro short from 08.85. That was the level that we were trading off of. That is not the exact entry, but that was the level. So we'll flip over here to the euro. And basically what we had was, again, a short from the 08.85 level. So we'll drop a line there at 08.85. Excuse me, a long trade at 08.85. And this was a trade that set up during the New York session. It was a pretty basic setup. We had a good level here. 08.85 was the level that we were using. This was the level that we were looking at. We come into it during the New York session, and we get our classic stop running confirmation. I do have information about the confirming entry on the front of the site. I'm not going to focus on the confirming entry in this video, because if you want to learn that, you can look at the video on the front end of the site. Obviously, this is walked through in even more detail in the members area, but there is a fair bit of information, free information on the front end of the site as well. So we had our break, that's the first criteria, our confirmation candle, and then we wait for the pullback for entry. This trade was relatively straightforward, ran off, hit our full 4% take profit. That puts us at 4% to start the month. Nice trade there to start the beginning of the month. Next trade was a trade on the pound. This long on the pound was on the 7th. So we zoom in here, and this was again on the 7th. It was from 54.90, so that was the level, 54.90. And again, we come into the level, we get our break of that level. In this case, broke by exactly 3 pips. The confirming candle here was closing. This was actually a single candle stop run and confirmation. Therefore, the entry would have been taken on the pullback here. And this trade resulted in a plus 2%. It wasn't a full take profit because we had news coming out at 8:30. We do not carry into news that is capable of spiking the market more than 15 pips. Although this news item would have went and hit a take profit. Some brokers widen spreads a great deal. You don't know if this would have come down, tagged your spread, and went off without hitting a take profit first. A lot of things can happen in and around news. Like I always say, if you want to give the broker a license to take advantage of you, then trade during extremely volatile news items. And that's the best time the broker has to take advantage of you. And quite honestly, in one of the most fair ways as well. They're offsetting their risk by increasing or widening the spread. And trading during that time is obviously a roll of the dice. So trading, or excuse me, carrying into it. If you want to trade immediately after, that's a different story, but at least carrying into it, that is where the most risk is contained. But anyways, the close of this trade would have been just prior to the news. That was up right around 2% at the close, and therefore 2% trade brings this up to 6% on the month. And we go to our next trade. Next trade was again on the pound as well, and it was a short. The level was 56.03. This one ended up being a break-even trade. So we had our break. We confirmed down on what was ultimately the fourth candle of the setup. Fifth candle provided the pullback, and we saw the trade run off a fair bit from where the entry would have been. The entry would have been 15 pips from the high, which would have been right here at 5,600. So from 5,600 down to the lows, you had about 32 pips of profit. A little unfortunate here because the market came back, probably tagged you by a few pips, and then ran off and hit a take profit. So definitely unfortunate as far as this setup goes. Was about maybe 2 or 3 pips on the pullback away from not hitting it at break even. Unfortunately, it did, and then ran off and hit a full take profit. We continue forward, still sitting at 6% for the month. We go to the next trade. And the next trade was our first losing trade of the month. It was a short from 1084. I know I'm not walking through level selection. Again, that's not the purpose of this video, but the level was, again, 1084. And what we had was a basic, standard stop run confirmation, stop run candle. 2 candles later, we get our confirmation of the downside on the pullbacks where the entry would have occurred, and then the trade would have been stopped out relatively quickly from there for a full 2% loss. That brings us down from 6%, up 6% on the month, to up 4% on the month. And then we go over to the next trade, which was the same day, and it was a pound short. And the level was 56.42. Again, 56.42. We'll drag this up to that level. This trade was a little late in the day, and for those of you, if you caught this trade, if you were scared out of this trade, I can see where it was definitely a little bit later in the day than I typically will take a trade. We had a confirmation back over here. The original 5 candle setup came together, never produced a valid setup, got another break, another confirmation, which is actually similar to a trade setup that I just took a few days ago, which we'll cover in next month's preview, the September analysis, which you'll see here as well shortly. But very similar setup. For those of you that did take or didn't take it, obviously it would be a no trade. For those of you that did, it was a 3% gain. Exit would have been at the 5 p.m. session change, and that would have been a 3% gain in that setup. Ultimately, that takes it from 4% to 7% on the month. Continuing forward, we go over to the 13th. This was a euro long, and this setup is not, I'm not going to count this as part of the record here, but what we had was a good backside level setup, essentially, is what it was. And I was not, this is a pretty popular trade. The level that we had here was, again, 84. And it was a bigger level. If you go out, it was the backside of a breakout point. And I was being a bit conservative on this, which is why I personally did not take it, just as a full disclaimer, which is why I'm not going to count it as part of the results. But it was a nice setup. And obviously, I ended up regretting not taking that setup. I did not pre-select that level, though. That was the level that I had talked about me not using, and that's why I'm not going to count it. I know a lot of you did take it, which is why I'm talking about it, but not going to be a part of the official results. Basic standard setup here: break, confirmation, pullback, ran off 4%. Nice 4% trade. Unfortunately, can't count that as part of our results. The next trade that was an official trade here was on the pound. This was a pound short. This is the 14th of August, and it is a pound short from the level 56.48. So this one here produced a break of 56.48. Following candle had the confirmation of the downside. Following candle offered all the pullback that you would have wanted. The entry would have been 15 pips from the high, which would have been basically right at the open of that next candle, which is only about 13 pips away. We had a really good entry on this one, or would have been a really good entry on this one, just because we were already within the target area. You didn't have to wait for any pullback. You did get some pullback. Ultimately runs off to the downside, hits 47, 48 pips total. hits our full 4% take profit within the first 15-minute candle. Nice trade there, brings us from 7 up to 11% on the month, and we carry over to the next trade, which is a euro long. This euro long setup occurred on the 17th. It was during the New York session. It was from 1067. So the level was again 1067. And we had a basic entry right here. We had our stop run of this level. We had our confirmation back up. We had any pullback that was necessary for the entry. And the exit for this trade was at the 5 p.m. session change. And that trade was a break-even trade. We continue forward at still remaining at 11% to the next trade, which was a pound short on the same day, which was the 17th of August. So the level was again 56.79. We get our break, we get our confirmation, the downside, and we get a pullback. This pullback, the reason I'm not going to count this as a full 4% trade is because it was about a 50-50 mix on those that got the confirmation to those that didn't. You had a situation where you're extremely close on the pullback, and then ultimately, for those of you that did not, like for example, some of the wider spread brokers didn't quite hit the pullback number. If you didn't hit the pullback number, you might have missed your entry on that trade. That's why I'm going to count it as half of what it ultimately was, which is a 4% trade, and kind of give a even representation there. That brings us up to 13% on the month. We go over to the next trade. The next trade was a pound long. It was on the 19th of August, and it was from 56.49. I was a little leery about this trade just because of the news because the stop run candle was the news candle, and it was only breaking by a third on the news candle. But regardless, it satisfied the criteria. Took the trade. We have our break here. We continue down. This was a long candle count, basically. This candle here produces the confirmation, and the following candle offers the pullback. Now, what we did have, if I remember right, we had some news coming out later, and so I ended up taking the trade on the news as we made a really deep pullback. I got stopped out by about a few tenths of a pip on this deeper pullback here, ultimately before it continued off to the upside, unfortunately. So a little bit unlucky, but that takes us down from 13% back to 11% on the month. We continue over to the next trade. Next trade was a euro short on the 20th of August. So the following day we had this euro short from 1203. Ended up ultimately being a break-even trade. You got a stop run, you got your confirmation down, you had your pullback to ultimately you had your pullback to where the entry would have been at the 1199 or 1200 level. From that area, from 1200, you ultimately had close to 17, 18 pips of profit on this. You had that in combination with the fact that you had a stop run of a lower level, shorter, smaller level. One of our criteria for an exit is a stop run against a trade that you're in. Doesn't have to necessarily be from a viable trade level. In other words, I'm not going to flip in reverse. But in this case, coming close to our break-even point anyways, in combination with a stop run against the trade that you're in, was the catalyst for the break-even move. Keeps us at 11% on the month. And then we continue over to the 21st. The following day on the euro had a couple losing trades here. The 19th to 24th was a kind of a boring and bad stretch for me at the end of this month. So we go over to again the 21st. It was another euro short. 1293 was the level. Just a really nice setup. I don't have any issue with the setup at all. I like the setup a lot, obviously, since I took the trade. Had a break, confirmation, all the pullback that you would have wanted. Stopped me out later in the day. 2% loss takes it down from 11% down to 9% on the month. And had another loss on the 24th. So we go over to the 24th. This was skipped over the weekend onto the next day, the following trading day, that is, on a Monday. It was a pound short from 57.21. And we had a basic stop run. This one broke, gave us our 3-pip or larger break, confirmed down, offered all the pullback that you would have wanted, and then ultimately ended up continuing to the upside, stopping you out going into the New York session. Nothing wrong with that. Takes us down to 7% on the month. And the next trade was during the day on the 27th. I am not, for those of you that are going to watch this video and took this euro short from the 1203 level, or excuse me, not the euro short, yeah, this was one of them, sorry. The euro short from the 1355 level, that is. The reason that I didn't, and the reason I'm not counting this as an official trade, this level was, it was a level I talked about in the preview, but I felt like we needed a larger bounce off of it. You did get somewhat of a bounce off of it. Would I have used it if I was there? Well, you know, I don't like the Monday morning quarterback things. I'm not going to say I would or I wouldn't have. If you did take it, well, then it was a nice trade for you. It was a full 4% trade, stop run confirmation, all the pullback you would have wanted, and or to get to our criteria for entry, that is. And it was a nice 4% trade. I'm not keeping it as part of the record because, as I discussed earlier, I was a little bit concerned about it earlier back in Asia. The level hadn't quite formed when I did the review, so I'm not going to go back and say I would have or wouldn't have taken it. If you did, that's great, but it's not going to be part of the record. We had another euro long from 1203. This level had didn't quite get enough of a break for me. If you did get enough of a break from 1203, well, you had your break here, your confirmation up, and your pullback. Again, another full 4% trade there, but one that I personally didn't quite break enough on, and therefore would not have been a valid confirmation for me. So again, not going to be part of the record. Unfortunately, that's 8% right there. That's a nice little swing. That's 2 full take profit trades. Unfortunately, not going to count. I know some of you guys, or a lot of you guys, did catch them, but personally for me, the break was not enough on that last one, so I'm not going to add that as part of the record. I was watching that trade, wanted it, just didn't get a large enough break on 2 of my brokers, and that's why I didn't take it. The euro short, this is the following day, so we're still sitting at 7%. We go over to the euro the following day. This is the 28th. It was a euro short from 1305. It's again 1305 euro short. Pretty straightforward trade, break, confirmation, all the pullback that you would have wanted, and then ultimately ran off to the downside, hitting potentially hitting a full 4% take profit. This one would have mattered what you did once the pound long came together. So if you go over here and look at your pound, your confirming candle on your pound is the 1215 candle. Now, if you go back, you look at the euro. The 1215 candle is right here, which would mean that the exit would have been right here if you were flipping positions over to the pound. 1274 from where the entry would have put you up somewhere around the plus 2% mark on that trade. If you then flip to the pound and you had your entry, this entry would have been exactly 20 pips from the low, which would have put you in basically right at the lows around the 83, 84 mark. And we were exactly at that same point at the start. Well, you were up 4 or 5 pips at the time of the, actually New York started down here around 84, 85. So you were pretty much right at break even. So worst case scenario, the combination of these 2 trades was plus 2%. Best case scenario was plus 4%. I'm going to take the worst case scenario and just call this a plus 2% trade. That way we have again, trying to be conservative on the number, and we'll call this a 2% trade. When I have a setup and then I have another setup while I'm still in the original, I do go to the other trade. So if I was there during that time, which I wasn't because I don't trade London, if I was there during that time, I would have went to the pound, and therefore that would have resulted for me a 2% gain on those 2 trades. So that's why I'm going to take that, because that is the criteria that I use, and therefore going to stick with what would ultimately be the most conservative number as well. That leaves us with a month-end total of plus 9%. Now, admittedly, August was, really not a great month. Quite honestly, it was fairly boring. Didn't have a whole lot of trades, and September, which you'll see in the next review, it's already at the end of September right now, was kind of a boring month as well. What I think this really illustrates is that even during some of the toughest months, we're still turning out a consistent profit. This is a picture of the euro dollar and the pound dollar. All these trades are on the euro dollar and the pound dollar. If you want more trades, you can trade many different pairs. I like to stick to the euro and the pound. I believe all pairs have a different type of personality. And I don't like trading, I don't like when people trade 12, 15, 20 different pairs. If you want to take on, 4, 6, maybe 8 different pairs and really get to know those pairs, I don't think there's anything wrong with that. If you do that, you could really increase trade quantity. You could go from an average of, say, for me, between the euro and the pound, New York and London, we'll see on average probably 20 trades a month. What that is just slightly less than a trade per day as an average. Some of the time we go a couple days without a trade. Some days you'll see 3, 4 trades in a row. So as an average, 20 trades, about 22 trading days in a month. That gives us an average of just shy of a trade per day. So if somebody wanted to increase that to say 30 or 40 trades in a month, that would be rather easy to do. Again, it would just require taking on more pairs if somebody wanted to increase that number. What I think this really illustrates as well is the power of compounding. If you just break out a calculator here, I'm going to use the number 100 for a reason. That'll give us an easy way to calculate an exact percentage gain. Remember at the beginning we talked about the gain that we've had since the beginning of May when I started doing these month-end reviews, these month-end analysis of the results. And hopefully it gives you guys a good picture of what is possible. And the fact that these entries being as mechanical as they are, hopefully it gives you the confidence to say, once I learn the strategy, once I learn all the ins and outs of a confirmation entry, you'll be able to replicate these results as well. And remember that the levels are pre-selected. They're selected for you. The levels that aren't, you will learn to identify newly created levels throughout the course of the day, which maybe makes up about 15-20% of the trades that you see. It is important to learn that. There is exact criteria around new levels, so it's, again, another fairly mechanical process. And it gives you a good way of learning how to trade without every aspect being discretionary. So anyways, if we add that, the months that we've seen, May being a 20% month, let's do that plus 20%. Obviously, that brings it up to 120, which would be a 20% gain. We take June, which is a 12% gain, plus 12%. That brings us to 134.4. So in other words, a 34.4% gain compounded. This is compounding it. And then July was plus 31%. So we'll add that to it. That takes it up to 176. In other words, a 76% gain at that time. And then August, which we just had, which was a 9% gain. We take that, 9%. And that takes it up to 91.9, close to a 92% gain over the course of 4 months. Now, I know a lot of people look at those type of gains and they say, I want to gain 100% a month. They also probably have 6 months, a year, 2 years worth of losing money. At some point, guys, what I stress to people is you have to sit down, you have to say, the get-rich-quick mentality simply doesn't work. Sit down with a pen and paper, see what compounding 10, 15, 20% in a given month will do to an account over the course of 1 year, 2 years, 3 years. As I always say, the time is going to pass. It's just a matter of where you're going to be 2 years from now or where you're going to be 3 years from now. If you start today and you start trading with a professional mindset, in other words, trading with proper risk per trade, with a very disciplined strategy and a very specific strategy, and you stick to it consistently, where can you be 2, 3, 4 years down the road? If you take that long haul approach, the probability of success is dramatically higher versus the idea of doubling an account on a monthly basis and hoping to be a millionaire in 6 months, 9 months, 12 months. That mentality just simply doesn't work out. How many people do you know of that have done that? The answer is about as many people do that as do hit the lottery, as hit the Powerball. It simply doesn't happen. If it does, they find a way to erase the vast majority of that profit as quickly or often much faster than they made it. We've all done it before. I remember when I first started to learn how to trade, I remember one day specifically, the week prior, I had a $15,000 week, was a huge week for me. And the following Sunday, I remember it. I remember the emotion of it. I remember everything about it. The following Sunday, I took that $15,000 gain and lost about 13,000 of it in a matter of about 7 hours. How did that happen? Well, it happened because I had no trade plan. I was very simply gambling. I was massively over leveraged. And when you're on a hot streak, that's great. You make money extremely quickly. But that money seems to evaporate much faster than even though you made it relatively quickly, it seems to evaporate even faster. Now, most people have been there, and the goal is to see steady, consistent profit that doesn't evaporate. And that's where you have to be disciplined. That's where you have to have an exact plan and trade that plan. So that's going to do it for this video, guys. If you want to learn the bank trading strategy, come over to daytradingforexlive@gmail.com. Check out our members area. Would be happy to have you as a member in the room. We have a live room twice a week. We also have a nightly video preview where I go over the exact trade plan for the following day. I list the exact manipulation points that I'll be using for the following day and any potential bias that I have or anything else that's developed over the course of the previous day. Cover that for the following day's trade plan. Give you very specific criteria followed with the exact entry criteria that we use. You take that trade plan to work for you each day, you implement the rules, and you come back, you do the same thing day after day, and you start seeing consistency. So if you want to learn what we do, you want to learn to track smart money, learn to identify where smart money is potentially entering the market and exactly how we do that, then I look forward to seeing you. And until next time, happy trading.